A very warm welcome to all our viewers and good evening to all. This is the 27th edition of Set This Knowledge series. This was an initiative wherein we have one speaker each month and speaking on a variety of topics ranging right from finance to well-being. We'll now play a short video of Cedrus Wealth Partners. With the finance minister unfolding the Amrit Kal budget, I'm sure we have a plethora of questions regarding what will be the implications on the economy and how will it impact us. We have with us today Mr. Abhishek Rastogi, founder of Rastogi Chambers, to get all these questions answered. He's a prominent lawyer, jurist, and also author of several books. We'll now play a short video to further introduce him. A very warm welcome, sir. It's an absolute honor to have you with us today. And I'm sure we all are looking forward for your views demystifying this budget. For our viewers, this is a moderated session where we will have our discussion with Mr. Rastogi. Meanwhile, if you all have any questions, you all can post them in the comment section and we will be happy to take them towards the end of this discussion. I would now like to hand it over to Mr. Prasenjit Bhattacharya, Director and Business Development Head at Cedrus Wealth Partners. Over to you, Prasenjit, sir.
Thank you, Unnati, for the introduction and setting the purpose of this session. A very warm welcome to Mr. Rastogi to this special session on Budget 2023. So as an economy, India is already seen as a glimmer of hope amid the global slowdown. Will the Union Budget 2023 do well to steer the country clear of global pressure onto a prosperous and inclusive future? So we would like to request you to share your opinion about the same to our viewers. Thank you. Over to you, sir.
Thank you so much for the introduction and that initial question. I think today what is most important is that India today is the 5th largest economy when it is with respect to GDP, which means that certainly India cannot be ignored. Also because of the political presence which we now have at the global stage, whether it is G20 summit and the presence of our Prime Minister across different economies, India is a strategic partner to a lot of countries now in different sectors. And the foreign trade agreements being signed and things which are happening at global stage, certainly India cannot be the country which can be ignored. Now, a lot of these strategic decisions which are being made makes it very important even for India to be a little cautious of what benefits must be extended, to what category these benefits must be extended, and to which sectors these benefits must be extended. So before we go into the budget proposals and these budget announcements, let's just understand that the endeavor of the finance minister is very clear, that she needs to reduce fiscal deficit. Now, if fiscal deficit has to reduce in next 18 months or so also, the tax collections have to be robust. Now, of course, we know for a fact that we will be approaching elections in 2024, and the tax announcements cannot be very harsh for whatever reasons. Interestingly, what has happened is that the indirect tax collections, which is predominantly GST, has seen massive surge in last 6 months or so, and the collections have gone up to 1.5 lakh crore per month, which was at one stage when it used to cross 1 lakh crore a month. There was a lot of excitement, and now consistently it has gone to that range of 1.5. Now, this means what? This means that the overall tax collection is improving, and it is for the first time that consistently the indirect tax collection is more than the direct tax collection. And how it helps the finance minister is that it will help her to maintain the tax buoyancy at 1 and still reduce the fiscal deficit. So these budget announcements, to the best of my understanding, have been proposed with an objective of reducing fiscal deficit, but at the same time keeping the tax buoyancy to 1. Now, if the GDP, so for example, what is the impact of tax buoyancy being at 1? Which means that if we are estimating that the GDP growth will be at 7%, the tax growth must also be 7%. Now, certainly what I feel that while these estimates are keeping in mind the tax buoyancy of 1, at some stage, possibly after 6 months, we will feel that, there the tax buoyancy ratio is improved further or is enhanced further as far as the GDP growth is there, because for several reasons, the tax collection will be much more than what is estimated today. Now, keeping all of these factors in mind, the fiscal deficit, tax buoyancy, and the GDP growth rate which we intend to achieve, there were two broad aspects before the finance minister. One was whether she would want to make this budget a populist budget and would want to give the benefit to the middle class income group and lower middle class income group. Or the second option, wherein it was felt essential today that let the benefit go in some way or the other, possibly proportionately less to high income category group. But yes, the objective was that let the benefit be given to everyone, for a reason that our tax collections due to consumption has improved significantly. And when I say improved due to consumption significantly, is that the amount of consumption which is happening and the tax collection due to consumption. So consumption taxes or your indirect taxes. Due to the enhanced consumption, it was felt appropriate to give benefit to both the classes, not only to the middle class income group, but also to the high income category group. And that's why if we see that the slab changes, if we just compare the new regime, if we compare the new tax regime with the proposed tax slabs and the earlier tax slabs, any person whose income is 15 lakh rupees or more will at least save 112,500 rupees, which means that if you are on an income of 15 lakhs under the new tax regime, under the erstwhile proposed slabs, and today under these proposed slabs, then you would end up saving 1,12,500 rupees. So, which means a substantial benefit to the middle income group. And of course, that rebate limit of 7 lakh rupees has been increased from 5 lakh to 7 lakhs, which means anybody for that matter, whose income is less than 7 lakh rupees need not pay even a single rupee of tax. So this is with respect to the middle class or lower middle class and upper middle class group to give this benefit. Now, if we talk about the professionals, we've been talking that the benefit which is given under Section 44 ADA and Section 44 AD, wherein the presumptive tax system comes in to play for chartered accountants, doctors, lawyers, etc. There the limit has been increased from 50 lakhs to 75 lakhs. And wherever I had discussions with finance minister and commerce minister, the recent discussions, I've always told that possibly this limit must be increased, and this must be increased substantially. So while 50% enhancement has happened to this limit, but according to me personally, it must further improve. And gradually and slowly, it is expected that it will be increased further. To me, that if we have increased the limit for MSMEs today from 2 crores to 3 crores, there is no reason that for professionals we should not take it to at least 3 crore rupees. If that happens, we are talking about ease of doing business, lesser compliances, lesser accounting, maintaining data, maintaining expenditure, calculating depreciation. All that comes as a benefit. So these were substantially the announcements which were the direct tax respite to the middle class income group or MSMEs. But now let's talk about the rich. And I've been very vocal that if our economy has grown at a substantially exponential rate, then one must also look about not taxing at a very, very high rate to the high income category group. And I was very vocal about these points prior to budget. And thankfully, fortunately, some change has come with respect to reduction of surcharge on the highest category income group, which was more than 5 crore rupees, which has now come down. The surcharge has now come down from 37% to 25%, which means that the effective rate of tax for the highest income category group has come down to effective rate of 39% as compared to 42.74%. Now, how this helps? In an economy, if you do not motivate the rich to work, there will be less of employment generation. There'll be less of incentives or motivation for new entrepreneurs, new risks be taken. There will be reduction of such risks if a substantially high income is taxed. There is also a risk that most of these high income category group people may divert their funds from India to outside of India. And I think to address that, there has been a proposal to implement TCS of 20%, and we'll come to that in a while. So any remittance which happens except for health services and for direct education fee, if you remit money out of India for either foreign tours and travels, or even giving money to your children for expenditure, or for that matter, even investments in property, etc., outside of India, there will be a TCS at 20%. Now, 20% is very high here for a reason that this money is which is being sent outside of India is already subjected to tax, and this is the taxable amount, the taxed amount which is now being remitted for whatever reasons. Now, of course, we understand that even if there is a 20% TCS, you would get credit in your income tax return. But yes, from the perspective of cash flow, there is an impact. So I think going back to our point, what we are saying is that any tax rate which is very high, even onto the rich class or a high income group category, would demotivate such entrepreneurs to perform in India or invest through India or buy properties in India. So I think slowly and gradually, even that surcharge on any high category income group has to come down. It must ideally not be more than 10% on any income which is more than 50 lakhs or 1 crore rupees. It should not be more than 10% at all. We must also understand that if this tax is very high, then a lot of these schemes, which are like PLI schemes or capital incentive schemes, may not become very effective here in India, because even the individual who would take the risk to get these implemented here, or make India a manufacturing hub or start a manufacturing unit, may feel that even if he earns or she earns a high income out of that venture, almost 40% is going to by way of taxes. So I think somewhere the decision has to be taken so that it is ensured that even the rich category is not taxed at a very, very high rate. It has to be not more than 30% plus 10% surcharge. Then I think on the customs duty rationalization side, there was a very, very welcome decision to exempt denatured ethyl alcohol, uh, because it helps the country in the blended program, blending of petrol program, and also a lot of indigenous manufacturing with respect to a lot of products such as nail paints, nail polish, your sanitizers, and also
Unnati, did we lose him?
Yes, I think there's been a network glitch, but I think Sir was just giving his views on uh, how the taxation, change of taxation in the premature demethyl alcohol will be impacted. Uh, for our viewers, I think the views that Sir has given till now, it's been quite thought provoking and quite a different perspective as to what he's been mentioning. And I would like to thank him for giving these kind of inputs. Uh, Sir will just
hello.
join us.
Is it there? Is my connection there?
Yes, sir. We can
So
hear you.
there was some problem. So I'll
Connected
just
in
start.
between. You were talking about the denatured
Yeah.
alcohol, where,
So
yeah,
basically, on the customs duty side, what I'm saying is that there are some rationalization with respect to customs duty, and there is a very welcome move with respect to reduction of duties with respect to denatured ethyl alcohol. So denatured ethyl alcohol now is exempt. So I think one is the ambiguity with respect to taxing of denatured ethyl alcohol. Second is, of course, uh, the manufacturing here in India becomes effective, and hence it will be beneficial for Indian manufacturers. Now, next, what I want to talk about is the capital gain with respect to gold conversion, and which is again a very welcome move, because there is a clear announcement that there will not be any capital gain if the gold is converted from physical to e-gold. Now, this means that any gold which you have in physical form, if you convert that gold into e-gold, then there will not be any capital gain on that conversion. Now, this will help the government. This is very interesting because it will help the government in getting the physical gold in its custody and then issuing these e-gold certificates. So from that perspective, it is a very, very important move for the government to improve its gold stock, gold reserves, and it will also help us in not importing a lot of gold, because if we have the stock of gold here in India and this physical stock improves or increases, then there will be lesser amount of import which will happen from outside of India. So I think this is very interesting. This will encourage people to convert their physical gold to e-gold, it will be safer. It will have the same liquidity. There will be same sort of increment on or the gain on the value, and it will help the country in reducing the customs duty or improving the balance of payment while when these imports are happening. And we've seen that, when it comes to silver, the rate with respect to silver has been increased. The customs duty rate has been increased substantially to make it as high as 15%. So I think the endeavor is very, very clear. So from that perspective, I think conversion is a good idea. Now, having talked about few of these things which look on the cards nice, let's also talk about some of these hardships which we may see, or some of these constitutional aspects which we may have to discuss. So we would now get into some of these provisions and to see whether these provisions are constitutional, or are these creating those hardships which would basically hit the individuals to a very, very large extent. Now, my first point is with respect to the capping on the upper limit for capital gains. Now, till now, if you have capital gains and you reinvest that money or put that money into bonds, then the capital gain is exempted. By which what happens is that, suppose if I am a high net worth individual and I sold a property, the capital gain, let's say, is 30 crores. I would invest that gain amount either in residential property or other property or in bonds, etc. And the money remains here and the amount of the capital gain is exempt. Now what happens is that the amount of capital gain which is more than 10 crore rupees is subject to tax, which means that I may pay tax on it. But once the tax has been paid, there is no incentive for me to invest that same amount here in India. Now, what will I do? If I have that same capital gain of 20, 30 crores, there is no incentive. The government may take tax from me at that stage when that capital gain happens. But I would not be very keen now to invest that money again here in India in the bigger property. I would possibly take the money to invest somewhere outside of India. I would say that, I keep going to London, let me invest or have a property in either Manhattan or London. So what I'm saying is that the move has to be careful. The taxation benefit must be given or denied in such a way so that the investments and the money remains here in India. Now, what happens by this provision is that there are 2-3 important aspects. One, whether it is arbitrary and unconstitutional under Article 14 to impose any limit with respect to giving this benefit, whether this 10 crore limit is arbitrary or not, that's the first question. The second question is that you are creating two different classes for the capital gain income which is less than 10 crores and for the capital gain which is more than 10 crores. Thirdly, are you defeating the purpose? Because if the investment or the reinvestment happens here in India, the property prices here in India, there'll be more demand because that money is invested here in India. Now this money is going outside of India. The investment happens outside of India. We then suffer on the balance of payments, forex, both. And even if you discourage such transactions by imposing 20% TCS, it hardly makes a difference to me because if tax is payable here in India, in any case, I would adjust that 20%. And if tax is not payable here in India, I'll get the refund. But I'll be very demotivated when the threshold with respect to this exemption for 10 crore rupees is imposed on these capital gain. Now, similarly, we spoke about 20% TCS on money sent abroad. So any now investment which happens, any property which I buy, even if I give money to my children, send money to my children outside of India, uh, that will all be subject to 20% TCS, which is slightly on the higher side, because this is not the income which is generated. And even if the income is generated, so for instance, if I am an advocate and I get fees from my clients, that amount is already subjected to 10% TDS. Now, if I remit that money out of India for whatever reason, there's 20% more TCS. So effectively, what has happened is that if I have earned, let's say, 1 crore rupees, that 1 crore is already subject to 10% TDS. And when I remit 90 lakh rupees outside of India, let's say for my business tour or my travel or to buy something, that 90 lakh rupees is then subject to TCS of 20%. So 18 lakh further you reduce, and what goes outside is only 72 lakhs. 28 lakhs have already gone by way of taxes, collection at source. Now, what will also happen is, for instance, if this amount is towards the legitimate business expense. So, for instance, if I have to go overseas and all of this is like my business meetings, then that entire amount, which is an expenditure, will unnecessarily lead to this tax collection at source, and I will have to file for higher income tax refunds, etc. So I think 20% is a high amount in this, and it should be again think the FM must again think about whether to impose it at 20% or at 10%. Now, if we talk about another aspect which may impact the rich is with respect to life insurance policies. So any life insurance policy, if you're paying a premium of more than 5 lakh rupees and the policy is issued after 1st of April 2023, there will not be any tax exemption on maturity benefits. So I think, again, a little harsh. I think not from the perspective of that you would not give the maturity benefits, but I think it is retrograde to the entire insurance sector. We have seen that the new scheme in any case is not giving any incentive to individuals to invest in insurance policies, etc. Now, with such proposals, I think insurance sector will go a couple of steps back in its growth journey. Another aspect which I was seeing, which is certainly positive with respect to MSMEs, but may have large impact on big corporates, is that there will now be disallowance if the transaction is with MSME, and the expenditure will be disallowed if you have not made the payment. Now, which means what happens in this case is, if I am following my books of accounts on accrual basis, the payment has not happened to MSMEs, then I would not get the deduction. It is not the case where the payment will not happen. I am maintaining my books on an accrual basis. The payment will happen. It leads to more compliances, more determination of the amounts between different categories, and so on and so forth. And also, on one side, when you would want to encourage MSMEs, the question arises is that why would I get into a lot of these transactions with MSMEs if I have to undergo such additional burden? This was the same question which we had raised several years back when GST provisions were made applicable when you transact with unregistered dealers. So it would basically discourage people to deal with unregistered dealers. So I think this also needs to be looked into. While it may on the cards show that people would want, the government intends to provide benefit to the MSME sector so that their collections improve, but I think in the long run, people will ask whether you are registered as MSME, and they would be reluctant to deal with MSMEs. The big corporates or the big businesses would be reluctant to do that. So it must not happen that while the objective is to give benefit to MSMEs, but because the brunt is coming on to the big corporates, etc., they are reluctant to deal with MSMEs. Another interesting aspect which I have seen is with respect to indirect tax, and this is disallowance of credit on expenditure of corporate social responsibilities. There is a provision under GST which blocks the credit in certain cases. This section is commonly referred to as Section 17(5), where there are a lot of uh, restrictions which are there. Disallowance of credit for corporate social responsibility, I think this will certainly have to test the constitutional barrier. This will at some stage uh, be going before the court to test the constitutional barrier, because in fact the objective of GST was never to block any sort of credit, because it leads to tax cascading, and the objective was that there should be free flow of credit. Whatever is my input is utilized towards the output. So I think disallowance of any credit, and especially when it is with respect to some good cause, including corporate social responsibility, is, I think, not a great idea. It must be looked into. In any case, if this is implemented as such, it will have to cross the constitutional barrier. So there will certainly be judicial review of this policy. Similarly, on the indirect tax side, when we talk about the place of supply, there are changes with respect to the courier and transportation services, because what they're saying is now it should be with respect to the destination of the service recipient. So the question which arises is whether there can be different principles. The Constitution provides that the principles must be determined for providing the place of supply of the services. And I think it will be but unfortunate to have different principles for the same category of service, and which we've been arguing in several courts on different services. So I think overall, if you ask me, the budget has given something to everyone. It is not the budget which is there only for the middle class income group. It has, in fact, given some benefits to the high income category group as well. If the intent is to make inclusive development and enhanced growth, then I think more such incentives must be given to even high income category group. There must be a lot of these changes and proposals and announcements which ensure that the money here remains in India. We do not want Indians to have family offices outside of India, and whatever are their uh, savings or income generated here in India are going to the foreign bank account, and all of this money is invested from foreign offices outside of India. The investment must happen from India. The income which accrues on those investments must also remain here in India. And I think from that perspective, there are few aspects which are possibly missing, but still we have time. There can be better clarifications. That these are just the proposals. There can always be a change between now and the Finance Act, and we hope that at some point of time there'll be deeper dive into these issues, so that to ensure that the high income category group is not ignored. And if that happens, then I think we will see a better growth, a better development, and all-round development. We do not want to run away from paying higher taxes, but I think what is important is that the benefit with respect to the tax must also come to each and every individual. With that, on that note, I would end my presentation, and I'm happy to address on any of the aspects.
Yeah, so true, sir. In fact, this budget has kind of everything for every segment of the economy, as you said. Yes, I would request Unnati if there are any audience questions. Let's take them one by one. We'll restrict ourselves to only two questions for the paucity of time.
That was an interesting and a very intriguing session, sir. I think the positives and negatives which you laid out of the budget has given us a very clear picture as to how this will be impacting us going forward. Thank you for reading in between the lines of the budget and giving us such a differential perspective. I'm sure all our viewers have a lot of key takeaways from your points, what you mentioned. Moving to the audience question, my first question to you is that there has been some change in the taxation of the MLDs, market linked debentures. Could you throw some light on this, sir?
See, this change, first of all, let's understand that there is a lot of this ambiguity around these changes. So we must not get into those changes as of now. There is already a discussion which is already going on with respect to how this has to be read. So, because there is some sort of ambiguity, I would at this stage not comment on it. But what I understand is, with my discussions at different levels, is that there will be some sort of a clarification which will come. So, I think we must wait for that clarification and then possibly address this issue.
Right, sir. And my second question to you is that the duty on chemical and plastic has been brought down. Uh, what are your views on this, and how will it impact these sectors?
See, I think the endeavor of the government is very clear. They would want to encourage indigenous manufacturing here in India. Now, if you see the trend, so for instance, if you want to make the artificial diamond here in India, the raw material which is used to make that artificial diamond, has the customs duty on that has been reduced. If you talk about the TV panels, the inputs which are required for those TV panels has been reduced. If you talk about the chemical industry for that matter, denatured ethyl alcohol, the customs duty has been exempted. So I think it is very clear that we would want to exempt or reduce cost so that the manufacturing here in India becomes competitive. So if you will see the final products, the customs duty has not been reduced, but those raw materials inputs which are used either for chemical industry or for that matter other sectors has been reduced. So I think with that, keeping that in mind, it was important to rationalize customs duty with respect to this sector, and which has been done so as to make Indian manufacturing more competitive.
Right, sir. I think that was a fantastic session, sir. Thank you so much for making the time to grace this event and giving your views on the budget. On behalf of Cedrus Wealth Partners, I would like to thank you, sir, and all our viewers for tuning in such large numbers. We will return next month again with a new topic and a new speaker. Thank you so much, sir.
Thank you. Thank you, Nati. Thank you,
Thank you so
Rastogi.
much.
Thanks. Yeah,
Thank you so
thanks.
much for taking your time out. Thank you.
Thanks.